So in the books of in the books in the books of AZ and Company, we have the branch account. We'll give the name for the branch. The branch is Nasik branch account. In the books of AZ and Company, Nasik branch account, we have the date, particulars, amount, date, particulars, amount. Okay. So as we go through the items, let's see which of the accounts it affects and post it accordingly. Now, sometimes some of these items may come in two accounts. It may not only come in the branch account, it may come in the debtors account or the stock account also. Okay. So it's not that it has to come only once or anything. If it affects the account, you need to put it in that, show it in that account. So besides this account, we're also going to prepare the branch debtors account. This is more like a working note actually. This is more like a working note to find out the missing figures. Branch debtors account, and we also have the branch stock account. Branch stock account. Okay. Komal said petty cash closing is not given. Now, petty cash closing, we can assume that it's the same thing, cash on hand. Okay, though here it's called petty cash, we assume that the closing is cash on hand itself. We assume that the petty cash will be included in this. Okay, so that's why we are not preparing that. In some problems, we may have to do the cash account as well to find out the closing balance of cash or whatever is missing. Fine. So let's start posting this. Debtors, we have the opening balances. So on 1st January, on 1st January 2007, two balance brought down. Two balance brought down. So the opening balances that are given to us, first we have debtors, which is 12,000. Then we have petty cash, which is 1,100. Then there is stock. There is stock, which is 6,000. And we also have furniture, which is 20,000. Okay. Now, we have written the opening balances here, but besides this account, some of these opening balances will also come in the relevant accounts. For example, we have opened the branch debtors and the branch stock account. Okay, so since we have the opening balance of debtors and opening balance of stock, these opening balances also have to reflect them. So that's what I mean. If it's not that these items will come only in one account, if there is another relevant account that you're preparing, it will have to be posted there as well. Okay, we don't need the date here, the date column here. Just okay. So we have two balance brought down, two balance brought down, two balance brought down. Debtors, the opening balance is 12,000. Similarly, we have opening stock. Okay. Now, this branch stock is going to look more like, if you see that it's going to look more like a trading account as such. So, we are going to have it as first, sorry, not first, delete this. Two, balance brought down, which is going to be stock is 6,000. The opening balance of stock is 6,000. Okay. Then we have goods dispatched by head office. That is the head office sending goods to the branch. So that's going to come in the branch account. So on 31st December 2007, two goods sent to branch account. Two goods sent to branch account, which is 78,000. Now, can you tell me where else this will come? Goods sent to branch account. This is a transaction between the head office and the branch, wherein the branch is sending stock or sending goods to the branch, where the head office is sending stock or goods to the branch. Besides the main branch account, where else will it come? When we are talking about goods, we are talking about stock. Where else will it come? Where else will this transaction reflect? Yes, very good. It's going to come in the stock account, because if the head office is sending the goods, or if the head office is sending stock to the branch, it will surely affect the branch stock account. We have an opening balance of 6,000. If goods are coming from the head office, this balance of 6,000 will surely increase. Okay, right now the head office is sending 78,000. So the stock will surely increase. So we are going to have this transaction here as well. Two goods sent, we'll put it the same way, two goods sent to branch account. Now I'm going to write this in the column. I'll tell you why a little later. We're going to have something that we may have to minus from this. Okay, 78,000. I'll just write it in the inner column for now. Cash sent, furniture we've already taken as the opening balance. Cash sent by head office for petty expenses. Again, this is going to come. So to cash, they've specifically said cash. So I have to put it as cash. In bracket, just to identify what it is, I'll put it as petty expenses. Cash for petty expenses. Cash for petty expenses, which is 2,000. Which is 2,000. Next, we have sales, cash, and credit. Now, where will the sales come? Where will the sales come? I told you the sales are not going to come in the branch account, because this is a transaction between the branch and its customers. The branch is selling goods to its customers. So, where will the sales come? What will say the sales affect? Which account will the sales affect? Yes, Audrey, yes. Credit sales to debtors, you said? Yes. Credit sales will surely come in the debtors account. Okay. First, we are going to show as, yeah, two credit sales. I hope everyone knows why credit sales, I'm taking it on the debit side. Okay. I hope everyone knows why I'm taking credit sales on the debit side. Who are debtors? Debtors are people who owe you money. Okay, with credit sales, your debtors increase. You will have more debtors who owe you money. So at the beginning of the year, you had debtors worth 12,000 who owed you money. Okay, during the year, you're selling goods on credit. So you have further debtors who owe you money. So that's why basically this credit sales increase this balance. So that's why I have to take it on the debit side. So the credit sales here are 36,000. 36,000. Komal had a question, and these are other accounts which we prepare. All the transactions will come, not only those of head office. Yeah. See, whatever, for example, debtors. Okay, branch debtors will be all those transactions between the branch and its debtors. Stock. Any stock that comes into the branch, or any stock that is going out from the branch, whether the stock is coming from the head office or going back to the head office, whether the branch is selling stock, okay, or whether somebody is returning stock to the branch or returning goods to the branch, anything with regard to movement of goods will come in the branch stock account. As simple as that. Okay, so these accounts, these are more like working notes that we are preparing just to find balances. So if something is related to that account, it has to be taken. So we were right now on sales, credit sales. We have already taken in the branch debtors account. Now the sales come somewhere else. Where else will the sales come? What happens in case of sales when you sell goods, whether it's cash basis or credit basis? Goods are moving out, stock is moving out. Yes. So basically, it's going to also affect the branch stock account. Yes, it's also going to affect the branch stock account. So what happened is you had the opening balance of stock 6,000. Okay. Besides that, the head office has also sent you. I've written this because there's an adjustment here. The head office has also sent you stock. Right now, you are selling stock, so it's going to come on the other side. It's going to come on the credit side. Right now, you are selling stock, so it's going to be buy sales. Cash sales are, you can write it in the outer column directly or in a column. 60,000, 36,000. 60,000. Okay, I'll write this in the inner column because there is an adjustment to it. 60,000 and credit is 36,000. Credit is 36,000. I'm not going to total this now yet because there is some adjustment. We will see what adjustment it is. Okay, now Komal, you said minus. We are not going to minus it here, but we show it on the other side. We show it on the other side. Okay, so the effect is the same. When goods come in, you're showing it on the debit side because it's going to increase the stock. When goods are going out, it's going to decrease the stock that you have. It's as simple as that. Okay, so I'm breaking when I'm explaining this, I'm just explaining it in a very simple manner to show how you post the transactions. Whether the transaction is increasing the balance or whether the transaction is decreasing the balance. Look at it that way. It will become much easier for you to post. Okay, next. Next, we have goods lost in transit. Now, this I told you doesn't come in the branch account. But where will this come? Goods lost in transit. Where will this come? Yes, very good. Goods lost in transit will come in your stock account because stock is going out. You're not selling it, but stock is going out. Okay, so I'm just going to leave a line because there's some adjustment here. So I'm going to put it as buy goods lost in transit. And how much are the goods that are lost in transit? 600. My goods lost in transit is 600. Okay. Next, insurance claim received by branch. Can this come anywhere? Can this come anywhere? I told you this is not going to come even in the branch account because it has got nothing to do. Branch account is head office and branch. So insurance claim, like Drupa said, it's not going to come. Neither can it come in the debtors account. It has got nothing to do with the debtors. Neither can it come in the stock account because when you're talking about insurance claim, there's nothing of stock involved. Now, maybe if we were preparing a cash account, that insurance claim could have come because the branch is receiving cash or the branch is receiving money. Okay, so that time that insurance claim would have come, and probably this insurance amount is already uh, sorry, yeah, this is not a slight problem with the figures. This is 750. Sorry, this is 750 and this is 600. Goods lost in transit is 750. Sorry, the amount just got shifted. Okay, probably the 600 and not probably, surely the 600 is reflected in this cash. This cash that has been received. Okay, some six it has been adjusted. So if you prepare your cash account, that 600, you'll see how the cash account tallies. But right now we don't have to prepare the cash account. Okay, so insurance claim, this is not going to come anyway because it is not affecting any of the accounts that we are preparing. Furniture to be depreciated, I will take it towards the end because when we are writing the closing balances, I will show it towards the end. Amount received from debtor, where will this come? Amount received from debtor. Where will this come? Debtors account. Very good. So basically, if the amount is received from the debtor, it's surely going to come on the opposite side. Because if the amount received from the debtors, the amount that the debtors actually owe you has to decrease. Okay, so I'm going to put it as buy cash, and the amount received from debtors is 24,000. Then we have discount allowed. Again, this is by the branch itself. Discount allowed. Who is the branch giving discount to? Can anyone tell me? Who is the branch giving a discount to? Very good, debtors. So again, this is going to come in the debtors account. So again, buy discount allowed, buy discount allowed. Okay, the amount is 480. Then we have irrecoverable debts. What's the meaning of irrecoverable debts? Bad debts. Okay, what happened? What's the meaning of that? You had an opening balance of 12,000. That is, your debtors owed you 12,000. Plus, you had credit sales during the year, 36,000. So in total, your debtors owe you almost 30 plus 40, 48,000. Some of the debtors have already paid 24,000. To some debtors, you've given a discount. Irrecoverable debts. What's the meaning of irrecoverable debts? Certain debts have turned bad. So if certain debts have turned bad, will it come on the debit side or the credit side? Think of it whether it's going to increase this or whether it's going to decrease this. If they've turned bad, it's going to come on the credit side. So buy irrecoverable debts. And irrecoverable debts is 520. Okay, just look at the transactions as whether they're increasing your balance or they're decreasing your balance. Another hint I would like to give you is, for those who don't want to think so much, on your branch debtors on the debit side, you have the opening balance and credit sales. Most of the other things come on the credit side. Normally, the two items on the debit side, if you want, you can write this down somewhere, are the opening balance and the credit sales. Everything else, mostly in most problems, comes on the credit side with regard to debtors. Okay. Then we have goods returned by customers. Now, goods returned by customers. Where will this come? Goods returned by customers. Again, customers are returning to the branch. Where will this come? Yes, very good. It's going to come in the stock account. Now, why did I leave this line? Basically, the branch has sold goods on cash basis and credit basis. Some of the customers are returning the goods. So here I'm going to put it as less returns. Less returns. And those returns are, I think the returns are 1,000. So basically, right now you have here, now I'm going to write it in the outer column. You have 96,000 minus 1,000, we get 95. What is the meaning? Less goods returned by customers. The branch had sold goods to the customers. Customers are returning goods worth 1,000. So actually the sales were 95,000. Now this returns come somewhere else as well. Where else will it come? Think who the transaction is with. These returns are going to come somewhere else. Yes, very good. It's going to come also in the debtors account. Okay, because your customers are returning your goods. So basically, from this 12,000 and this 36,000, this 1,000 will have to be adjusted. From this 12,000 and 36,000, this 1,000 will have to be adjusted. Okay, so I'm going to put it as buy returns. That is 1,000. Because if they are returning goods, basically what the amount that they owe you will decrease further. As simple as that. Then we have goods returned to head office. Now, goods returned to head office, first we know this is a transaction between the branch account and the head office. So, I'm going to show it here. On 31st December 2007, buy goods sent to branch account, which is 2,000. Even though they are saying goods returned to head office, I told you whether it's between head office and branch and head office, it's going to come here. Okay. Now this is going to come somewhere else. Where is that? This is going to come. Goods. The branch is sending goods back to the head office. Where will this come? Very good. It's going to come in the stock account. If you remember, on the debit side of the stock account, we have shown this goods sent to branch account. Here, the head office is sending goods to the branch. Now, what they are telling us that the branch is returning goods back to the head office. Okay. So we are going to show it again as less returns. Less returns. And how much are those returns? Basically 2,000. 2,000. Yes, so basically the net goods that the head office has sent to the branch is 76,000. The net goods that the head office is sent to the branch is 76,000. Goods returned to head office 2000. Okay, so initially the head office has sent goods worth 78,000. Now the branch is returning goods worth 2,000. So basically, the head office has finally sent net goods of 76,000. Branch expenses paid by head office. This will come in the branch account. So two. Uh, Again, they have not told us how the expenses are paid. I always like to assume that it's by bank. Okay, somebody can assume that it's by cash as well. That's not a problem. Uh, so first we have uh, freight. Freight is 800. Freight is 800. Then we have rent, which is 2,400. Then we have salary 6,000. Then we have advertisement 1,800. Advertisement 1,800. So these are all expenses. We have taken them. If they had told us that these expenses are incurred by the branch, I would have ignored this. Right now, why am I taking it? Because I know that the head office has paid for those expenses. Amount remitted by branch to head office. This is going to come in the branch account. So by, again, I'm assuming it's by bank remittance. That is, the branch is sending an amount to the head office, and the total is 84,600. Okay, and then we have the closing balance. Before writing the closing balance, I will leave a line. There could be a profit or a loss. So by balance carried down, by balance carried down. Uh, we have right now. I only know the cash and the furniture. So the cash on hand is 600. Similarly, I know the furniture. Furniture, I'll just have to do a small calculation. We had an opening balance of 20,000 minus 10% because they've said to charge depreciation. So 10% of 20,000 will be, yeah, 2,000, which will be actual furniture value will be 18,000. Okay. Now the rest, debtors and stock, I will have to first finish those accounts to find it. Okay. Now the thing is, can anyone tell me what this account looks? Okay. First we will do this. We will close this. This is easier. I will close this account. We can easily find out the balance carried down. Okay, the balancing figure will be the balance carried down. So this will come to 48,000. This is going to come to 48,000. So we'll have a balance carried down by balance carried down. It's going to be 48,000 minus all those amounts, 24, 480, 520, 1,000, which is going to come to 22,000. Okay, this is the balancing figure. So this is what we prepare the debtors account. We prepare the debtors account to find out this. So I'll write this immediately here. Debtors also we know. Okay. Now debtors is we have found out it is 22,000. Okay. Now the only thing that we need to find out is stock. Now can anyone tell me what does this account look like? What does this account look like? This account looks similar to something that we very often prepare. Not only be in branch accounts, we normally this account looks similar to something we normally prepare in other maybe in some other problems that we have done, or even in another accounting subject that you may be preparing an account like this. Can anyone tell me what this account looks like? What does this account, similar to, it may not be exactly like that, but what does this account look like? I would say, yeah, not departmental. It's not a departmental account. We don't have departments here, but you're coming close, Drupa. What account does this look like? Where you have your sales and you have your returns that are shown, goods lost in transit. Yes, very good, very good. Balancing. This basically looks like your trading account. This basically looks like your trading account. Now, two main things that are always there in the trading account. One is the closing stock. Okay. Now, the whole purpose that we have prepared this branch account is basically to find the closing stock, the so-called balance carrying down or the closing balance of stock, which is the closing stock. Okay, we have prepared the branch account to find out that closing stock. Now, there's another figure that otherwise is normally the balancing figure of the trading account. What is the balancing figure normally of the trading account? What is the balancing figure normally of the trading account? Very good. It's the gross profit. Okay. Now, in this problem, we don't know the closing stock. We have prepared this account basically to find out the closing stock. Yes or no? But we have got a clue of how to calculate the gross profit. We have got a clue right in the beginning. They have told us how to calculate the gross profit. And what have they told us right in the beginning is AZ and Company of Bombay as a branch in Nasik. The following transactions relate to branch. Branch sells goods at cost plus 33%, 33.33% on cost. So basically, on the goods that are sold by the branch, they make a profit of 33.33%. That's what it means. The brand sells goods and earns a profit of 33.33% on that cost. Now, basically, we know that the branch has sold goods worth 95,000. Whenever we take the sales, we take the net sales. Okay, not the gross sales, net sales. Net sales are what? After you minus the return. And they told us that the element of profit is 33.3. So we'll just do a simple calculation. We normally assume that cost is 100. Okay, here they have told us the profit is 33.33. The cost is 100, the profit is 33.33. The profit is 33.33, and therefore, since the profit is 33.33, the selling price, always selling price is equal to cost plus profit, which will be 133.3. Okay, this is a simple calculation where you do time and again in different problems. Cost, we always assume it's 100. Always we assume it's 100. Okay. Profit, they've told us that it's making a profit of 33.33% on cost. So that means the selling price becomes 133.33. Okay. Now we know what is our selling price. We know what is our selling price. We need to find out that profit. We are trying to find out the gross profit now so that we can find out the balancing figure here. We are trying to complete this account, and one item that is missing is the gross profit. So we know the selling price. We are trying to find out the profit. Okay. So what I'm going to say here is for 95,000, 95,000 is at 133.3. 95,000 is at 133.33. At 33.33, it is how much? At 33.33, it is how much? Okay. Now, if I do this calculation, what will I get? It will be 95,000 into 95,000 into 33.33 divided by 133.3. 95,000 into 33.33 divided by 133.33. Now, if I do this calculation, I will get, just do that calculation, 95,000 into 33.33 divided by 133.33. Divide by 133.33. I get 23,748. Okay, I get 23,748. Now, 23,748. Now, instead of taking it as 33.33, okay, I'm just going to do a small working note somewhere here. Instead of taking it as 33.33, Okay, if I just do 33.33 divide by 133.33, can you tell me, can somebody do this calculation? 33.33 divide by 133.33 into 100. I just want to show you something. If you do this calculation, you basically get 24.99. You basically get 24.99. If you say 24.99 is basically equal to 25%. 24.99 is basically equal to 25%. So what I can also do is, instead of saying instead of saying 95,000 into 33.33 upon 133.33, I can also say 95,000 into 25%. And if I say 95,000 into 25%, you can do that calculation and check. 95,000 into 25% is 23,750. 23,750. Now, normally in most books, you would see that we normally don't take it as, we normally take 33.33 upon 133.33 equal to 25%. Okay, just to make things a little clear, 33.33, if you remember in the previous chapter, I explained 33.33 is one third when you convert it into fractions. Okay, 33.33 is one third. Let's do another calculation here. 33.33 is equivalent to one third when we convert it into a fraction. Okay. Now, whenever you see this, instead of doing this entire calculation like this, normally whenever you see this, whenever they tell you it is 33.33 on cost, when I say cost plus, we normally assume on cost, they calculate a percentage of 33.33. Normally when it's 33.33% on cost or one third on cost, it becomes one fourth on selling price. This is a standard calculation that is done. And how they can arrive that one third on cost becomes one fourth on selling price, I just showed you this. Okay, I just showed you this. 33.33 upon 133.33 into 100 is equal to 24, which is equal to 25%. How did I get this 133? It's all this calculation. So normally when they tell you it's one third on cost, we normally convert it, instead of doing this whole thing, we normally say one fourth. And one fourth is 25%. If you take 25% in terms percentage, it is 25%. In terms of fractions, it is one fourth. Because 25% is one fourth of 100. 33.33% is one third of 100. Now, why have I done this entire calculation is because instead of taking 95,000 into 33.33%, instead of taking 95,000 into 33 and getting this 23,748, I directly take it into 25%. If I take it into 25%, I get it into a more rounded figure. If you see, the difference is just 2 rupees here. Okay, if you see, the difference is just 2 rupees. If somebody still takes it like this, it won't be marked wrong. But this would be a better way of doing it. You get a more rounded figure. Okay, you get a more rounded figure. Now, how did I arrive at all these calculations? How did I arrive at all these calculations? Is through this. This is again all rough work. This is again all rough work. Okay, now I'm going to just put an or here. Okay, so I'll just explain this entire thing again. Right now, we are missing the closing stock or the closing balance of stock. And we know that we have to calculate the gross profit because some hint has been given to us to calculate the gross profit. And gross profit is calculated as a percentage of sales. So we know that the cost is always 100. Profit, they have told us in this problem, is 33.33. So that means the selling price becomes 133.33. Right now we know the selling price. It's 95,000. So 95,000 is at 133.33. What would be the profit element? We want to know the gross profit. So gross profit we have found out as 23,748. I've just taken you a step ahead and instead of keeping it as 23,748, I want to round it up. Okay, this 33, how did I get this 33.33 upon 133? I've got from this. I'm saying that 33.33 divided by 133.33 is equivalent to 25%. How can I say that? Because of this calculation. Okay, so and then to summarize this whole thing, I'm saying that normally when they say 33.33 or one third on cost, it becomes one fourth on selling price or 25% on selling price. If they had said one fourth or 25% on cost, if they had said here, if they had told it to me as cost plus 25%, I would have said 25% on cost or one fourth on cost, which would have been next when I'm calculating 20% on selling price or one fifth. One fifth. If the problem had said instead of 33.33, they had said 25%. My calculation here would have been 25% is one fourth. Go a step ahead, add 1, it would have been 1/5 or 20%. If you take 25 upon 125 into 100, you will get 20%. You can do that calculation. Okay, so a standard rule is when they say one third or 33.33%, you have to take it as one fourth. If they say one fourth, you have to take it as one fifth. How do I arrive at all this? Just do this calculation. So basically 33.33%, 33.33 upon 133.33 is equivalent to 25%. How I know it's equivalent? This is what I did. This is how I've shown it's equivalent. Okay. So I'm going to write my gross profit as 2 gross profit. 2 gross profit is 23,750. 2 gross profit is 23,750. And then I'm going to find out my buy balance carry down, or you can say closing stock also, buy balance carry down, which is going to be the total of this is 6,000 plus 76,000 plus 23,750, 1,05,750. 1,05,750. Okay. So if I get the balance carried down, which is the balancing figure 95,750 minus that from there, you will get it as 10,000. So my closing stock is actually stock in hand is 10,000. Okay. So to finish off this the problem, I think again we have a profit. So the total here is 137,200. 137,200. 137,200 and two profit and loss account. We have a profit again. Balancing figure is 7,100. Is 7,100.